Well, g'day there, everybody. Thanks a lot for joining me as we move into Wednesday's session of trade. That will be the 27th of November, 2019. Before we move into the analysis, I just wanted to say that this is going to be the final full session of this week. On Thursday, the markets will be closed in observance of Thanksgiving Day, and also on Friday, the markets will be closing a little bit earlier. They will be closing at 1 p.m. local time. So again, the last full session for the week. It has been so far, anyway, a very profitable week when it comes to the trend continuation, and also more noticeably, that of Amazon. Yesterday, or at least on Monday, I recorded and said, keep an eye on that of Amazon. We've been paying very close attention to this. We have been, right, observing this retest down here at 1,740. Again, this is playing into the overall trend exhaustion to the downside of what has been that of a corrective move overall in Amazon since the peak, going back to July, of 2019. We have been in the midst of, for quite some time, or ever since, that of a reversal pattern. It's really looking to me like that of an inverse head and shoulders pattern. And what we have essentially just done, really Friday through Tuesday, is really cementing that of that secondary right shoulder. You can see this reversal which took place on Monday. We started to see the pop up. And then again, I said pay attention to Amazon as at the close on Monday. This is now Tuesday's candlestick here, up a further $23. In fact, we started looking at Amazon bullishly all the way over here at 1,748. Again at 1,753. We had to close out a portion of those positions, okay, before, but we also re-entered after earnings at 1,789. But more recently, right, we pulled down, this bullish trigger to 1,766. If I show you this on the weekly time frame, you can see already after two sessions, we're up over $50, $51.22. Again, we have really 1.5 sessions left in the week, but really if you take a look at this pattern just here, this is a textbook inverse head and shoulders pattern, and we're really starting to see that acceleration out of that support area. So really when it comes to our top 12 individual trade list, also the 3 closely followed market indices, I can say overwhelmingly that the majority, if not almost all of these trades have been extremely profitable. Yes, there are going to be some bumps in the road along the way, and yes, we can see some unrealized losses as those trades continue to set up before they get moving. But really for the period of 2019, when you think about it, we've been net long on this market really for the entirety since 2,525 points on the S&P 500. These are all additional re-entries that you can see on my screen. And here we are, we're closing up all the way at the moment anyway at 3,140. This goes back to a couple of weeks ago whereby we started to lay out our projections on the upside sort of targets, right? Our objectives as to where we believe the markets are moving to, or at least in terms of the S&P 500. This still remains to be true. 3,175. I'm not sure exactly how long that has been on the screen, but since we have broken out, I would say really probably around mid-October, we started talking about this as a measured move in terms of an ascending triangle. Really, it looks as though we're pushing on and up and we're getting very, very close to actually hitting this target. Again, just to reaffirm, we closed at 3,140 points. If my maths is correct, okay, we're probably 35 points away from our first target up here. And as such, okay, you can see the NASDAQ continuing on its bullish ways. Even more recently, since October, we've had entries at 8,260, 8,368, 8,504, and most recently 8,607. This is in the space of the last 2 months, so really 1.5 months. Again, on the Dow Jones Industrial Average, it is the market, again, which is sort of lagging that of the S&P 500 and the NASDAQ. However, what we did achieve during Tuesday's session is another new all-time closing high price, 28,121 points. This takes us back to more noticeably, or recently anyway, in the month of October, 26,590. 27,156 and 27,505. It looks to me, I'm not sure if you've actually had this re-entry here at 28,151, but we pretty much tagged that during Tuesday. We got awfully close. I assume we're going to break above that as at or during Wednesday's trading session as well. So again, Amazon, it has been sort of the thorn in the backside. I think we can all agree on that. However, really starting to build traction, and you should be very excited about this move moving forward. Again, my target on this, and has been my target for quite some time, 1,972. If you just wanted to round this up to 1,800, okay, the current price, just to work with round numbers here, We still have a further $172 of intrinsic value to build into those call options on Amazon. So I've received a lot of emails, not only as at the close on Monday, but also continued through to yesterday's session, whereby we've got a lot of happy people because, again, this is taken away from most recently unrealized, right, losses against everything else that we've been tracking. Again, I've just recapped the S&P 500, the NASDAQ. Let me just rotate through a couple of these other trades again. We've got Apple. You can see all of these bullish trade triggers going back to 202 or really since 184, where we back tested the primary bullish trend line here. So again, you can see since 2000 for the majority of 2019, we've just been net long a bunch of these individual trades. I've already recapped that of Amazon, okay, which is what was my intention anyway at the beginning of this video. You've got Boeing Airlines, whereby I'd say 50% of people are in at 362, less are in at 351, but this just continues to move. Looks to me like we're setting up again a very short-term resting pattern, whereby once we tag these exponential moving averages, which I'll bring up on my screen right now, we should see a continuation up to 387. So that's looking pretty good recently. We've got Baidu, which is retesting the open window. We've seen a bounce, okay? A little bit of a pullback on Tuesday, but again, this is looking quite good. A prime type of move whereby we should see this back up at 150 relatively soon. Caterpillar, again, you can see 121 was where we started to get interested in this. We closed this out actually at 124 where we started rocketing up here prior, or at least when we came back down to retest this declining resistance area. Again, these are past bullish triggers over here, but this biggest move leading into earnings started at 121.40. As such, we've just re-entered as we've seen the successful backtest of this resistance turn new support. It's a similar story. It's a similar narrative, not only in the markets. That's why we go through the market analysis in such detail, because it has a massive trickle-down effect on our top 12 individual trade lists. So if you understand the direction of the market, if you understand the direction of the trends, it becomes a little bit easier to actually successfully navigate the financial markets. It becomes even more successful when, of course, you implement, in terms of returns, when you implement that of options as opposed to actually buying the underlying stock itself. So again, COP holding up and turning off from this rising trend line, 58.14, 59.71, again, 54.26. These are all retrospective bullish triggers. Target on this is still up here at $62.50. We've got Disney, 140, 147, 150, 128. Take your pick. It's looking pretty good at the moment. Google did see a little bit of a pullback over the past week or so. But again, very similar to a bunch of other stocks, it's pulling back into their rising, right, exponential moving averages, and we're starting to see that bounce play. What's most excited about this, what I'm excited about anyway, is Amazon catching up to some of the movements that we've seen in Apple and also Google. That's been, again, one of the big narratives that I've spoken about in that pro analysis class, and I encourage you to again jump in and learn more about this analysis. IBM is pulling back below its 135.83 entry. This is critical if it can hold above this rising trend line. Looks to me like we're moving towards the middle, or at least the apex of this symmetrical triangle. This gives us another measured move, very similar to what we did when it comes to the projections of the targets on S&P 500 and also the NASDAQ too. Microsoft is playing a pretty good game at the moment. Again, post earnings, we've had 141. Sorry, let me repeat myself. 142.56. This was a re-entry. If we closed the gap, we didn't. And since then, we've had a re-entry at 146.31 and also 151.69. And to round out, this has been another sort of work in progress. I've spoken about publicly the overlapping sort of themes between that of Netflix and also Amazon, and how sometimes you just need to give these trades a little bit of time until the majority of people wake up to just simply what's going on. We started nibbling on this stock at 281. We re-added at 295, and here it is. Most recently above this little breakout point at 309.73. We're up here at 312.49. So again, overwhelmingly, we are still very much so bullish on these markets. For the bears out there, respectfully and politely, just be careful. I'm going to continue to say that to you. If you think the market is overextended, if you think that the market has moved as far as it can, it's got a lot further to go. It's got a lot further to go in terms of higher prices. So don't think for a moment that this market is putting in any form of a macro top. Won't happen until late 2020 at the earliest. All right, so there's a lot of time, and there's potentially also a lot of pain, unfortunately, if you find yourself trying to front run the bearish trade a little bit early. The power, the trend, the direction, right, the momentum, it's all on the positive side, it's all on the bullish side, and still to this point, the majority of people still haven't actually bought into the market, I could say, whereby they're still a little bit skeptical. Maybe you find yourself in that position. And there's going to come a point where this market goes absolutely parabolic, whereby it will be the fear of missing out, the FOMO, the elation, which eventually we will sell into at a later date. So again, that's going to be a little bit of a late Tuesday evening market recap, Wednesday morning transition, the final full session of this week. I just wanted to say too, congratulations to everyone who's been following along with this analysis and has, if you have, taken action, because I know that you're doing very well for yourself at this point, and that makes me very happy for you. All right, so keep it up. Keep up the good work. Be patient if you see the market slow down. Be patient if you see the market pull on back down. It can do that, of course, temporarily short term, but overall, just stick in the direction of the trend. Hold those positions. You're going to see your capital accounts continue to swell in size. All right, and that's what I'm very, very, very proud of you for doing. All right, so that's going to do us. Enjoy your Wednesday, everybody. It's James signing off on behalf of Pivot Point Trading. All the best. Farewell.